Now, competition for online payments is heating up. Absa is the latest bank with a new online payments platform targeting South Africa's online shoppers. Business writer for the Business Day, Mudiwa Gavaza, joins us with his analysis of the bank's efforts to improve online payments in terms of security, ease and speed. Mudiwa, a pleasure. Good afternoon.
Good afternoon, Noltando.
I want to speak about payments because every time you and I have spoken about fintechs, the issue of payments come up because this is the most popular kind of fintech product. And when Absa, a traditional bank, decides to step into that realm, what exactly are they trying to do?
So, in essence, what we're looking at is anyone who's ever been to an online website of any kind, think of your online retailers, think of booking flights, accommodation, anything like that. You go to checkout. And usually there's 1,000,001 options for you to make a payment. And basically what they're saying is now there will be an Absa option that's there, an Absa Pay option that's there. Because what happens on a lot of websites is that certain websites, you do have a direct link, to your bank, but in many cases you're using your payment aggregators, think Ozo, and those types of companies, PayU and others that are there that can help you to link between the merchant website and your bank account. So what they're trying to do now is to say, okay, fine, we as Absa, we're now coming in and saying, okay, how do we integrate with more websites directly and with more of these payment aggregators directly, so that at the end of the day, the big thing is instead of you entering your card details, you are basically authorizing a purchase through your banking app, as opposed to having to enter your details and all of that stuff, and you have the risk of your card details and all of that stuff being hacked, being victim to fraud and that type of thing. Yeah.
Is it worth it, Mudiwa? Is it worth the effort? How you tackle? Is it worth it to go through these efforts, just considering, like you said, how many aggregators are available, and even like the different kinds of aggregators? Rather, I think of buy now, pay later, for instance, and the various ones. So, in my mind, is it worth it for Absa to have gone through this journey to put up this infrastructure to have this service available?
So the reason I chuckled is because, as far as I'm concerned, in an economy, and especially like the one that we have in South Africa, some of the most intentional businesses are banks, right? They don't do things randomly. They would have done a calculation and looked at either a share of market calculation that's happening there, a transaction volume calculation, a fees calculation that is justifying them saying, actually, this is something that we want to get in on. It's no secret that there's more activity now in terms of South Africans shopping online, and you want to make sure that people have yours as the way to pay for something, transaction fees, transaction volumes, all of that stuff. But also, you're also trying to do a customer experience thing as well, right? Because we've all been on websites, or I have at least been on certain websites where there's multiple steps to complete, a particular, a particular payment. However, what they've done is they've gone and, decided that customer experience is going to be part of it. You've got the security element, but the customer experience. So, for example, they said that they did a pilot with Ozo, 12% higher rate of success in terms of completing a payment, 22 seconds faster, on average. 22 seconds doesn't sound like much, but when you're on a checkout page, you actually do feel, especially if there's, the spinning, the rotating, you can feel 22 seconds happening there. So I do think that they've done their calculations and they do see, an increase there. And it is an opportunity. There's a lot of stuff that's happening online, a lot more businesses that are moving online, a lot more websites that are accepting online payments. And if you can make yours, a preferred payment method, then it gives more, more impetus to get people to actually transact with Absa.
Very interesting, because another one that's important here is, did Absa build all the infrastructure on their own? That really matters, right? Because another interesting thing about tech, there is partnerships and the ability actually to actually plug and play into your competitors' infrastructure to
Yeah.
still get what you want to get. How did they go about that one, Mudiwa?
So from what we can tell, because what initially happened is they brought out an announcement, and then we then went to them, to say, okay, fine, we understand that you guys have said this, but underneath this, like, what have you done? One of my questions to Absa was, does this mean you guys are looking to become a payments aggregator, right? Because if you think about Ozo, for example, Ozo allows you to pay from a gateway for you to be able to pay, through different websites from different banks and, other institutions, right? Is that what you're trying to do? And they flipped it, kind of, when they replied me to say, actually, what we're trying to do is to become integrated with more websites and to be integrated with more, with more of the aggregators. And to also make sure that if someone goes through an aggregator and they pick us as the bank, so take Ozo, for example, because like I said, they did a pilot with Ozo, and so the 12% and the 22% I mentioned earlier on is basically them saying that using an Ozo, for example, or a direct website, we actually are faster, right, than all of these, our competitors. That's the quiet part, that's not being said here. That's the first part. And then the second piece is that for them, it sounds like they've been developing the tech in-house, but their way to market is firstly, those direct integrations that I spoke about, but secondly, the aggregators. They've got the pilot with Ozo, and they've moved into market with Ozo, and then they've also got Stitch, which is another one that's going to be, upcoming. So that seems to be their plan on how to, cover as many websites as possible.
Then, Mudiwa, if all the banks do it, does it matter that you do it? Because then I'll have Absa Pay and Capitec Pay and FNB Pay and Nedbank Pay, and it doesn't.
From that point of view, then it becomes a very fast race to the bottom. And I simply say that because now you're competitive, because you have a competitive edge for some time, right? Who knows how long this 12% and this 22% lasts for before others decide that they're going to throw, maybe a month's worth of development work, at this issue so that their platforms, end up on that point. What I think is a more interesting piece, and where I thought they initially were going to go, because they called it Absa Pay, I thought they were looking to become sort of in this an aggregator more than anything else. Think Apple Pay or Samsung Pay. I thought this is where we were going with this thing, and that it was going to have wider applications beyond just the online. Perhaps there is a roadmap, to make all of those things happen, because I think that's how they end up standing out, especially in a market where it's sexy to talk about Apple Pay and Samsung Pay. I think even Garmin and all of these other, platforms, exist, but we haven't really seen a bank-led one, right? And if you're able to do something like that, I think that helps you to stand out. But my question, once again, if you do something like that, what stops your competitor banks from doing, that exact thing? And for that, I would say that the answer is above my pay grade.
Well, time will tell, Mudiwa. Time always tells. That was the Business Days Mudiwa Gavaza. From online payment platforms to alternative markets, in case you missed it, most investors create their portfolios by investing in familiar assets like stocks and bonds, which offer growth and diversification. However, some investors look beyond these traditional options to further diversify their investments, including blockchain. For more insights on this, on the close, United caught up with the MD of Mesh Trade, Connie Bloom. Let's take a look.
I think the tokenized space, specifically within the capital markets, is so important for the African landscape, not to mention the South African landscape, because Africa, and specifically South Africa's economy, is based on a large bank of entrepreneurs. And these entrepreneurs are always looking at growing their businesses and making them more relevant and bigger to make sure that they can tackle the problems of tomorrow. And especially within this space, capital is very scarce.
Yeah.
So generally, we see the larger players being able to acquire that capital through the traditional structures such as stock exchanges, or the smaller players can go via banks and venture capital funding. But there is the strong middle that is not served by the market currently. Going to the one side is too expensive for them, going to the other side is too small for their businesses, and they also have to give away a piece of that equity. But now this Finance 3.0 movement, especially with Mesh's involvement there, is creating new ventures and new channels into the market, or into the sphere of capital raising that these entrepreneurs truly need to build their businesses.
I mean, you talk about capital being scarce, but I guess also one would say that it is scarce for certain businesses. As a company that's looking to raise capital, what should make you want to go into this blockchain-based kind of capital raising alternative?
What should drive you into this space is a need to preserve or go for lower fees, I would say, is the first objective. The second objective is also to be able to raise capital from a wider market participant. So the one side that is very interesting within our market is that there's a strong retail component. We recently took a bond out to market and we had a 17% retail involvement in that bond, which is fantastic and unique for this segment. So definitely, if you want to have your community involved, if you want to have other people that you do business with involved, this is definitely a sphere for you to consider.
Well, it's quite interesting that you also bring in the retail investor, because we know with this space, there's a lot of institutional investment. In terms of, you know, coming in as a retail investor, what do you get out of this? What are the levels of returns that you can expect? And also, what makes this space attractive for retail investors?
There's numerous things that make it attractive for retail investors. I think the first and foremost is that it's unique. It's something that retail investors could not traditionally interact with. And I think you and I would have both loved to be able to invest into Apple when we all thought it was still a food company. And now we're providing you with the opportunity to do more of that with all these smaller entrepreneurial ventures that are coming to board across the entire African continent. So you're looking at good quality companies coming into the capital raising sphere. They're providing an interesting return on investment, but they're also providing a different risk profile than what the retail investors are generally used to. So some of it would be a bit more risky and other ones would be a bit more weighed out in that risk as well.
Well, I mean, a lot of, you know, the trust in the traditional finance ecosystem has to do with, you know, compliance and, you know, being stringent on that so that investors do get the kind of returns that they are hoping for and that, you know, they're promised. How then does this blockchain-based system navigate through that?
I think the South African regulator has made large strides in this space specifically. So there has been recently regulatory categories introduced for companies like ours to be involved in the market and also deal with retail investors and any institutional investor for that matter in a regulated and safe manner. So us being a regulated company and other companies also coming into the board being regulated as well, we can create that comfort for retail clients specifically to invest into some of these assets.
Yeah, well, I mean, it's not just, you know, tokenized bonds that are on offer in this alternative finance 3.0 space. Talk to me about some of the other options here and if you are offering them.
Definitely. So we have a full spectrum of assets that are available all on a tokenized form. And here the blockchain is a system for us. It's a way of ensuring that transactions can occur and accounting can happen. So just because it's on blockchain does not mean that it's now all of a sudden everything is cryptocurrency.
That was Connie Bloom from Mesh Trade.